Good evening, all. Ira Epstein of Linn Associates with your financial market wrap-up. And this wrap-up is for Tuesday, and we're at the 6th of December, 2022. Tomorrow's December 7th, big day in history. Remember all those days. Okay. So I finished the outside day course today. Now they have to compile it and put it together so it plays through the website and keeps track of different things for you. That'll all get done this week, but the course is finished, so it's just the day that they decide to release it. I'm hoping it's before the weekend. So yay, right? Now I'm going to go back and look at the enhanced Bollinger Band course and see if I've done some of the wrap-up chapters the way I just did this one. I might want to make a change for that. We'll see, and I'll let you know if I do that. If you're a paid subscriber, we'll figure a way out that you can get that one way or the other. If you had bought the course, you have to be a paid subscriber if you had bought the course. Okay. So, as I look at the markets, the big difference is just this past Friday, you get a jobs data number that's huge, and the market rallies. It likes the economy's that strong. Now, nothing has changed. The reports that have been coming out are showing the economy's that strong, and the markets have gone into a tailspin to the downside. Why? I think it's just as I said over the weekend. You're basically flaunting in the face, the economic data is, not the marketplace, flaunting in the Fed's face. Hey, you can talk about the lag effect all you want, but we're so strong, we're just going to keep going. That's what the data is saying. So what the Fed has to do is say, enough of this. And why back off from a 75 basis point hike? Maybe you got to stay up longer and higher than originally thought. And that's what this market is dealing with. Do I think the market's going to crater off of that? No, the economy's still too strong. But I think that it way, can I say enough ways, got ahead of itself on Friday. I didn't understand that rally, come rain or shine. I didn't get why it was staying up. Another thing that's going on is I don't think anybody has a handle on what to do in the energy markets. With all that's going on, Australia today raised its key rate. We on the 14th are going to raise rates again. And as we go, European Central Bank, they probably have to go a half a point. The Bank of England, got all these banks going to do it. Does that impact the demand for that? Number two, the shipping. What happens with these prices? Unfortunately, the Eurozone set the price. They argued, but $60 is too high. You want to do damage to Russia, put it at $50, the cap. Smartly, Turkey is letting in the straits there, all ships build. They're not able to do anything. Turkey's demanding. They know that the ships are insured, where they're at. They don't want a problem with all this. Well, that creates one set of bottleneck. But this is what you're going to see. These are the problems that are facing it. And don't you just love it that inside of Russia, there seems to be drone attacks taking place at some of their big air bases. I love it. If they can do all these things to Ukraine, I think it's great that they have it done back to them. Let the people see that they can be struck. End this thing. That's basically what it's about. When you get to the S&P 500, the key is, what does the market do here? Well, 39.15 seems to be the line in the sand. That'd be the neutral number in the market. You tried the upside and you've pulled back. And again, you're still caught in this. The market was certainly looking a lot better 4 days ago when it was up here, and it's given that up. The swing line, no trend. Now you've got a lower low, higher high. There's nothing doing there. And the market's stuck between three moving averages temporarily. The 200-day, one of the things I say here on a regular basis is the first challenge of a 200-day. It's where the market's going. It's going to keep going. I get clients that say that all the time, and they inevitably lose. Why? Because they don't take money off the table. Everybody thinks you're going to the moon or you're going to hell. Which one of the two? And you don't do either. There's points where you learn in this business because of the leverage in futures of 90%. This is not the stock market where it's 100% you pay cash or 50% leverage, basically. That you use that leverage. You don't get scared to get in and out. You get a market that goes your way, take some money off the table, gives you buying power. And if you're wrong, you're out and you made some bucks if you can. That's the name of the game. Right now, you're void of a trend. You're stuck in those averages, and the market's getting narrowed in by the Bollinger Band, which will probably take some of the volatility out of the market, which is what I want to see. If you're going to get a Santa Claus rally, you got to get a base building again somewhere. Okay, that's going to be the key if you're going to get that. I don't know what it's going to do because I don't know what the Fed's going to do come on the 14th. I can make an argument they go 75 points, and that doesn't mean that it's bearish the market. It means the Fed's saying, hey, the lag effect, we can always back off, but we aren't seeing it yet. Why are we backing off until we see it? Maybe we stay that way. Ira would do that if he was on the board. They're smart enough to not have me on that board. When we take a look at the micro mini S&P 500, you can see where you're at, and you can see you're getting oversold. So I look at it and I go, okay, it's already done its thing. I don't know that I have anything to do there. And the same is happening with the NASDAQ, which is in a downtrend. It fought its battle at the 100-day average, and that 100 or 200 shows up regular, especially when it's with a Bollinger Band on the first time. I always pay attention to it. Yeah, sometimes you can go a little bit behind you. Sometimes it pays no attention. You play the percentages, all right? If you sit down and you play the percentages and you understand them, you're trying to move the game to your, how do I put this? To your method where you're taking something off the table. It's terrible when I watch traders build positions, build, and they don't know how to take a profit. It's no good, okay? You got to learn to take money all the time off the table. Put it on, take it off. Put it on, take it off. Everything's a new bet. Do you understand that? Higher high, lower low, narrow Bollinger Bands. Bye-bye. I think sideways action is going to happen here. Same thing here. I know you're going to say, well, Ira, I'm at the low of the band, but the odds favor when you hit a Bollinger Band bottom, you'll stay within the band 95% of the time. So you want to play that it's going to break apart under it for the 5%. And I go, I'm happy. If I'm a bear, which I had no positions in here, but if I were a bear, that's where I'm coming out. Plus, you're going back and forth in these averages with no follow-through one way or the other. We then get to the VIX, and the VIX did not fall apart as John Bollinger was predicting. He had sent out a text when you got under 1900, it was going to collapse. I believe it was 19 or 20. The opposite. Again, I like my method of tying in better than just Bollinger Bands, my momentum, the way I teach it in my enhanced Bollinger Band course. And this told me when this was occurring, you're going back to the 18-day average to fight a battle. It's right where you're at. Now, if you take out 2263 and you got to 2260 today, not 63, well, then you negate the downtrend. So right here, is it a sale? Nope. Any numbers that are under 30 and not embedded, in my vernacular, are not a sale. In the T-bond market, today's the day that I believe traders should have liquidated everything. Now, you'll say, Ira, it's still embedded. Yes, but it's your first test of the 100-day average in the Bollinger Band top. Bye-bye. You own it the rest of the way. First of all, I already know that a week from today, I'll be telling traders to do what? A week from today, it's the 13th. Do I want you to go through the CPI report in the morning? Probably not, because it's going to set up potentially a strong report. Just locks in the Fed. Why would they go 50 basis points? I know I'll be the guy that's wrong on this, but that's my thoughts. I haven't seen anybody but me talking, by the way, 75 basis points. I'm by myself on it. I wish I'd get some company. You lost the embedded reading in the 10-year note, so you don't have to get up here. You could fall back now to the 18-day average. You have to make a new high to say that that signal's not valid, that when you lose an embedded reading, you go back to the closest moving average under the market if you had a bullish reading. In the dollar index, tell me you're not fighting at this 200-day average. We picked up on it with the combination here of the Bollinger Band. That's where I think the pros came out of shorts. I am not saying they're buying. I'm saying they're not short. That's a big difference, and they're covering shorts. In the eurocurrency up here, I said to you 2 days ago, that's where you got to look at the pros is coming out. Well, it's not a bad move from getting up there at 106.06, and you're suddenly back to 104.75. And what also happened? You lost your embedded reading way. So Does it have to go to the 18-day average? Not really. The 200 could have been the signal too. Let me take you to it, and you'll see what I'm getting at. Watch this. So here you are at the close of business, and this is the close of business Monday. Now let's get to today. You close right on the 200. I could make an argument, I should make it maybe, that the 18 is still in play at 103.95. Probably. You're right on that average that was the first real support. I'll know I'm wrong if you make a new high on the move. But is there anything bearish on the chart? No. You're correcting now. You go from locked in bullish embedded, and you then become overbought. So you got to work that out or re-embed. It's one of the two. In the British pound, what are you doing? You're losing the embedded reading. So there's a theme. We have a theme. If you take a look at the New Zealand dollar, you look at this currency, you're looking at the euro, they lost their embedded reading. So to strengthen them, or the weakness in the dollar, which way do you want to look at it? We've got that shift in it right now. That doesn't mean these are trend shifts. These mean these are corrections within a market that did that, and we're looking for what the next part is. And I'll repeat, you get to that 200-day average, you own it. I don't want to. In Bitcoin, I thought the market would start going sideways here. I told you it was wrapping its arms, the Bollinger Bands, around the market to take volatility out of it, and I still think that's exactly what's going on. Now, in my report tonight, I show prices for crude going out 4 months, and nothing's near the $70 range. So the importance of that to me is we heard President Biden run hat in hand to Saudi Prince Salman and say, oh, please pump oil, please pump oil. We'll buy them. We'll buy for our strategic reserve at 72. So as usual, he spilled all the beans. He doesn't keep his game plan close to the vest. So you, I, and the rest of the world should be looking and saying, okay, where is the potential beginning of buying oil for the strategic reserve? Well, it was good enough for Crown Prince Solomon. Why isn't it good enough for America? So that's what I think we got to be paying attention to. Now, you're also down to the Bollinger Band in the Brent. That's where I think pros are covering shorts. I know you're going to tell me, oh, it's falling apart, Ira, it's going to keep going. You tell me that. That's fine. I'll do it my way. Same thing in the WTI. And what number are you pressing? Well, if you take a look, let's just go back and see what today's low was in the market. It was 73.41. We're still not in the 72 level. But as we get down here, I'm looking hard. What about what's going on now in heating oil? Well, you've latched on to the lower Bollinger Band. This could be that Gorilla Glue trade. If it is, two things happen. Number one, that drops the market down like a rock. Number two, what's that going to do for inflation? I realize it's not core inflation, but it's big-time inflation. So if heating oil and gasoline prices and natural gas prices are all coming down, isn't that a good thing down the road? The answer is yes. When do we start to see the numbers? That's going to be the key. Unfortunately, this is all happening the past 4 days. This is December 6th. These are December numbers. We will see the first leg of this down in the November numbers. Remember that. You're definitely going to see that. You'll see that back here, the first part of November as well. You were breaking down the price. So the headline number that takes that in should be a softer number. If it comes out really strong, it means other parts of the economy, not this, are just on a run to the upside. How do you beat that? Now, one of the popular booklets that we've put together with our friends from Futures Magazine is Guide to Technical Indicators, Volumes 1 and 2. If you have a must-read, this is it. Each one's like a short vignette with the chart patterns, everything shown here, explains it in plain English. You're going to get it. You're going to understand the talk that they give here, and you learn a lot. And if for you pros, it's a refresher. You think you don't need them? When I was doing now the outside day course, I learned so much again. I knew it, but to put it down, to teach it to other people is different than how you and I know it, and you've got to be able to explain it to people to help them. So how do you get this? Just take your cursor, move it up to the top here. It'll take you into the free offers on our website at iraepstein.com. choose what you want. This is all included, by the way, in our futures trading kit, which also gives you the charting software and other goodies that you need. I'm Ira Epstein. Talk to you tomorrow. Have a good evening.